we've got MapmyIndia, which has reported revenue growth of 50% in the first quarter. Revenues come in at 65 crore rupees. You have the net profit that has also gone up by as much as 17% or so. We've got the management joining in. Rohan Verma, who's the Chief Executive Officer and Executive Director of MapmyIndia. Thanks so much, Rohan, for taking the time, and good morning and happy Monday to you. Talk to us about the revenue growth. It's quite substantial and it's a higher pace of growth than you've achieved in the previous financial year. What has driven this kind of growth, and is it sustainable? Is this kind of a pace something that you will continue to achieve in the remainder of the financial year?
Thanks for having me on your show today. The revenue growth for MapmyIndia was actually broad-based, which is quite good, whether automotive OEMs or aftermarket fleet and logistics companies or businesses across sectors or the government for their digital transformation needs. So A&M revenue was up 65%, and the C&E, consumer tech and enterprise digital transformation revenue was up 37%, as well as a bunch of new wins on the all the customer fronts, whether on four-wheeler or two-wheeler or banks or retail brands or tech companies or the government at national, state and city level. And we're sitting on a large order book, as we explained before, which was up 85% to 699 crore at the beginning of this year. So the revenue is a reflection of us working through that order book, through existing orders, plus the new wins that we are getting. And that's what's leading to kind of this good revenue growth and momentum.
Let's talk about that order book then. You mentioned that you're getting orders from, as I understand it, existing clients. You're getting more orders, but have you increased the size of your client list? Have you added more clients? What kind of clients have you added? What is the size of orders that you're getting? Where does the order book stand at the end of the first quarter?
Correct. So yeah, when I mean new order books, I was referring to new client sign-ups. So just as some examples, the EV two-wheeler that is in the news a lot, Ola Electric, they went live. Also new EV OEMs on the two-wheeler side have signed up. So we've gained those orders. On the four-wheeler side, the very popular SUV Scorpio N, which sold about, did an order booking of about 1 lakh units in less than an hour. That goes live with our maps and navigation. Again, more and more OEMs signing up. On the enterprise and consumer side, a leading bank, a leading footwear brand, a leading steel manufacturer. These are all new customer wins. A leading delivery and logistics tech company. Again, new customer wins. And on the government side also, national, state and smart city, as well as the National Survey and Mapping Agency. So all of these are kind of new order wins, which boosts our order book for the future. We disclose our annual new order bookings numbers. So it's an annual number because in B2B, there's a lot in our funnel, but as it gets translated into a firm order or contract, that can take its time. So we look to kind of update the market on an annual basis. That is what grew from 377 crore at the beginning of last year to 699 crore beginning of this year, up 85% last year.
So significant growth. I want to understand the government side of things as well, Rohan, because clearly the government at the central level as well as various states are undertaking quite a bit in terms of digital transformation. What kind of a percentage of your revenues will go towards government/government agencies? How do you see this moving?
Correct. So historically, in the last year or so, it's government has been a 5% of our revenue. And the government, as you said, is undertaking a lot of digital transformation. So we do see the future where the government can be a larger contributor. It'll still be a minority part of our business. It's just the mix that we like to have across different sectors to be well diversified. The good thing also from our perspective is we're a digital products and platforms company, in a sense an OEM. And that kind of shields us to some variations in government projects where systems integrators take up the full project, but it'll be a good, healthy mix. Not that this is a big revenue generator, but it's just interesting how we're aligned very strategically with the government. The new Har Ghar Tiranga campaign that the government is doing, the harghartiranga.com website, where you can plant a flag at your location. That entire thing is running on our map APIs, and the amount of traffic, traction, visibility is significant to us as well. So just one of the many examples where the government is leveraging us as an indigenous, homegrown mapping and geospatial company.
Fair point. G-Tropy acquisition, as I understand it, 8 crore revenue contribution in the first quarter. Is the integration completely done? What is the kind of contribution that you expect going forward, and how much did it contribute to the bottom line?
Yeah, so the integration is underway in the sense that, some revenue, some costs need to be aligned, because MapmyIndia already had an IoT business, a healthy, growing IoT business. But with G-Tropy's acquisition, we really want to have a laser, dedicated, focused team, management team, and a company focused on this very large opportunity of 20 crore vehicles, many of which are fleets for logistics or fleets for passenger transport, where they can embed or leverage our IoT and SaaS solutions. So actually the revenue opportunity for G-Tropy, our IoT business, is quite significant in the time to come. And as this integration gets completed, as they scale, the EBITDA and PAT contribution will also start becoming meaningful, let's say towards the end of this financial year. So it'll get reflected in the full FY23 numbers. And I mean, that's why we're very excited about kind of having taken up this acquisition. It gives us a very clear kind of scale up and unlocking of opportunity on this IoT and 20 crore kind of potential addressable market of vehicles to which we sell our IoT devices and our SaaS solutions. You can think of the recurring revenue that will come from that as this segment kind of digitally transforms itself.
So with that in mind then, Rohan, I'm trying to understand, by the end of the financial year, you see quite a lot in terms of tailwinds for the company, the integration of G-Tropy as well. What are your expectations towards the end of the financial year in terms of the elevation of both revenue, EBITDA, margins, bottom line? How do you see that panning out?
So we don't give specific kind of guidance for the future, but just good indicators that are there is what happened to our order bookings and order book in the previous year versus this past year, because that's reflective of kind of what revenues and revenue growth will look like in the future. And if you look at really from a margins point of view, we're a fixed cost business. I mean, it's all people, it's all intellectual property, digital products, digital platforms. If you look at our margins, they're quite healthy. EBITDA of about 46% and PAT margins of about 34%. Historically, PAT has been in that 30 to 35% range, and EBITDA has been in that 35 to 45% range. That gives us this ability to have strong financials on a short-term kind of quarter-on-quarter basis, but also gives us this leeway to invest for the long-term future of the company. And so we, in that sense, you kind of have a picture of what the company might look like towards the end of the year without me sharing kind of specific numbers.
Got that picture. Thanks so much, Rohan, for sharing that with us, and pleasure speaking with you. And I'm sure that we'll connect at the end of this coming quarter for the next quarter results as well. But thanks so much for taking the time.
Thank you for having me. Really appreciate it.
All right. There you have it. That's the management of MapmyIndia.